Hey guys, good afternoon, everybody. Today is Monday, April 15th. It is 1:58 right now. Our scheduled mentoring sessions for 2 o'clock. So I'm gonna go ahead and set up this room real quick and we'll get started shortly with our mentoring session for this week. So it's got a couple of things here to update. Looks good. So one last thing here. All right, perfect. So let me get this link sent out to you guys here in the premium. It's been a while since we've had a mentoring session. Of course, that up there, there. No, there's only 3 guys here. All right, so I'll get a few moments for people to make their way in, and then we will get started shortly. See, the market was moving today.
I see you're still doing off. You live with him already?
All right, so hey guys, welcome to the mentoring session. Today is Monday, April 15th. It's 2:01 right now. Our scheduled mentoring session was for 2 o'clock. I think people will probably be joining in a little late, or we'll have some stragglers here and there. So if you guys have any questions, feel free to put your questions in the chat. As you guys know, these mentoring sessions pretty much run off your questions. So if there's anything specific that you guys want me to cover, I know it's been a while since our group mentoring session, so there's probably going to be a good amount of questions. That might trickle in over time. But if you guys don't have any questions, I'll pretty much just cover, or I'll review the new strategy that I'm kind of working on. It's not really a new strategy. It's a strategy that I've been using in the past. It's just a new strategy for you guys because I haven't really introduced it to you guys yet. So we'll do that. And once we do, kind of give you guys a general understanding of how it works. It's a super simple strategy. It's a lot simpler than you guys may think. It's basically just a continuation of the momentum. So let's see. Maria is asking, hi, can you please explain me the requirements for the CV strategy? Sure. So I will cover that too. So that'll probably be our main thing to cover first. Maria's question, Maria wants me to cover the CV strategy, which is the consolidation variations. And other than that, we don't really have anything else planned. So probably cover the CV. I'll kind of give you guys a little intro to the momentum divergence strategy that I've kind of put together for you guys here. It's an older strategy, so it's not really a new strategy. It's something I've used a long time ago. I just don't really use it anymore because I found it to be not as accurate during, trending markets. It works very well during sideways markets, but I'll kind of just give you guys a little run through of how that works. So, all right, let's start off with Maria's question. So Maria's question was to cover the the CB strategy. I don't think there was any CB entries that came up today, but I'll go ahead and take a look here. So from 8 o'clock. Yeah, I don't think there was any entries today. I'll go and take a look at so here, or actually I wouldn't mark that one up. There was no trend right there. There's no trend there either. I'll go back to a previous day. Let me go to a different chart so I don't like mess up the markings from today. So let's go over here real quick. Let's go to, let's say Friday. I think Friday was a day when there was some entries. And I see your question right there too, Nikki. So we'll also cover that as well. So going over here to Friday, let me just replay it back to 8 o'clock. I'll see if I can see anything here. Turn the high lows. Okay, so we had a bearish trend here. Okay, so here's a perfect example right here. So here goes an example of the consolidating or consolidation variation. Right here, Maria, let me see if I can put this up. I think I do have the criteria up here. All right, consolidation variations. So first you want to identify the trend. Pretty simple, right? You just want to identify if the price is trending downwards or price trending upwards. So as you can see over here, price is obviously trending downwards because you have the pivots shifting to the downside. You have price below the pivots, and you can see all the pivots are pretty much ribboned out. So with that said, you have a confirmation of trend. The second requirement requires that you identify a variation reversal pattern. So it means one of these patterns here. It can be a double body, double wick, or it can be a high green candle with a red follow-up, or a low red candle with a green follow-up, just depending on which direction you're trading in. Since we're looking for a sell here, you're going to look for either a double body, double wick, or you're going to look for a high green candle with a following red candle. So step one, identify the trend. We identify it here as bearish. Step two, identify a variation reversal pattern. So you can see price comes down, comes back up right here. And we have a double body, double wick rejection right there, right? It's 2-in-1 basically. So with that said, it kind of fits all criteria actually. So it doesn't matter which pattern you're looking for because it fits pretty much every possible pattern that can appear. So double body right there, double wick, high with a green candle and followed by a red candle, smaller red candle. And that goes to the third step over here, confirm the second candle is smaller. This is the main difference here that you want to focus on. It's just making sure that the following candle is smaller. Once you have all that lined up right there, you will enter on the close of the second candle. So with that said, you have the setup right here. You enter a short position. The TP stop loss, traditionally it's 1030, but because of the low volatility, we've been using 1025. I mean, it's just really up to preference, gives you more of a safety net. I've been using 1025, but it doesn't really make a big difference. It's only 5 points. So using 1025 right here, this is what I would typically use. You enter the trade, let the trade run, and you can see a full TP right there. That's exactly what it would look like. Let me see if there's another example here. I don't think there was very many examples over the, obviously the past couple of days. Yeah, I think that's probably the only example. Here's another example right here. I don't think we would take this because this is pre-market, but I'll just show you it as an example here. Let me see if because volatility is kind of low. It looks like it's still moved. All right, so let's go over here real quick. Obviously, we wouldn't take this because this is pre-market, but I just want to show you another example here, Maria, of one where it's not a double body or a double wick. So you can see it's pretty close. I mean, it looks like a double body, double wick, but it's not exactly there because you can see the red candle is slightly below. And that's why the criteria here is a little more relaxed compared to the V1 variation. So same thing again right here. You want to identify the trend. You can see price is below the pivots. The pivots are angling down, they're ribboned out. So this shows that price is in a pretty decently strong bearish bias with regard to trend. So for step one, you want to identify the trend. You can see here it's bearish. Step two, you want to identify a variation reversal pattern. So again, right here, you're looking for a double body, double wick. That's not present. So you go down to the next category down here. It's a high green candle, and you can see this lower highs with the green candle, and it's followed by a red candle, right? That's going to be step two. For step three, you want to confirm that the second candle is smaller. So this high right here is green, the following candle here is red, and it's obviously smaller than this green candle. So that meets criteria. Moving on to step four, you just want to enter on the close of the candle. Same thing like you do for a normal V1 variation. Enter there again, 1025, very simple. You let the trade run, and you can see again right there, another full TP. Yeah, it's super simple, Maria. This strategy is really good for a sideways market. So you can see over here that the market was actually going sideways, right? So it'll let you trade within the range, right? So you're able to trade within the range. So the market doesn't really have to be moving directional like for the other strategies. This actually works very well with a sideways market. So yeah, there goes, that entry right there. And you can see it's super straightforward, super simple. There's going to be some nuances, of course, when you're watching the candle, because sometimes, like, for example, this candle here, it's a little more obvious, right? Because you can see how much smaller it is compared to the following candle. But you're going to have some candles sometimes that are very close. And then in a lot of instances, you're just going to skip those trades. You want to make sure that's super obvious that the following candle is smaller than the first candle. So you don't like get in a wrong position or anything like that. So there goes that. Yeah, no problem, Maria. If you want to see more examples, just let me know. But I mean, it's pretty straightforward. I think you'll see it better during live market conditions versus it's going to be harder to identify during live because the candles are moving so fast. But for practice reasons, it's basically an easier V1 variation. So you're basically looking for a V1, but it's a lot simpler because there's more options. It's not just double body, double wicks. So let's see, Nikki's asking if we can go over today's MPS. She lost. Yeah, so we can go ahead and check. Let's see. Do you know what your entry price was, Nikki? You can check from like looking at your order data, because if you entered at the right price, it should have filled regardless. Like it should have hit your TP regardless of the fact. The only thing I can think of is if you didn't enter like at that exact price point, and then you ended up getting in at a worse price point. So let's see, the entry happened over here at, I'm so glad I timestamped these so we can find them a lot easier, at 729. So let's go to 729 real quick. Right over here, right? Okay, so here is the MPS. Let me just turn that off right there. Okay, so here's the MPS entry that we took today. So the way that this candle closed, and I actually entered at the wrong price. So that's why I'm saying the only way that you would have lost this is if you entered like late or if you entered at a different price. Because for me, I had my pending order at the 70, and that's how I got in. So this candle actually, if you were watching during the live session, this candle was lower. So it was like down here, and at the very last second, it spiked up. So I actually got in at wrong entry as well. So I got in right here at wrong entry, and the entry should have happened up here, because you can see here that price kind of pushed down, then it pushed up, and then at the very last second, this thing pushed up like above the 70 mark. I was waiting for it to set at the 70. So as soon as the candle closed, I actually already set my order. And I got in exactly at the 70 mark. So for me right here, I got in right away, and then it just went straight to my TP. But the correct entry point was supposed to be here at the 80. So for me, I got in, but I'm assuming because it spiked so quickly, it went straight to my TP, because you guys can see over here for my profits, the slippage actually worked in my favor on majority of the accounts. So this account over here closed me out at 700. I got hit with some slippage, which didn't work in my favor. But the other accounts over here actually worked in my favor because I was only supposed to make 1,000 on the trade, but I made 1,200 or 1,100, etc. But the actual entry price was supposed to be here at the 380. But I did get in at 370. So I'm not sure when everybody got in. Did you get in at the 370, Maria? Because I know you lost too. Um, yeah. So it depends on your order type. It depends on your order type because for me, I had a limit order. So it got me in exactly at that price. If you have a stop order, it might get you in at a different price. So it might have filled you in a little lower, a little above it. So that's why I always try to make sure that the limit order gets set and it's not a stop order. The only way you can do that though is if you enter when price is below. So what happened was I entered like right before this candle closed and actually got in right at the 70. Um, so because what happens is if you have a stop order, it fills you in at market. So it doesn't necessarily fill you in at 370. It'll fill you in at whatever price, it's currently at. So I think that might have been the case, uh, Maria, or not Maria, Nikki. Well, both of you guys. So here's what I think could have happened for you guys. So I think what happened is like what I did was I set my pending order before this candle closed, right? Like at the very last second. So when I did that, it was a limit order. I think what happened with you guys is you guys might have set the order after. So as soon as the candle closed, you probably set your order. And then if price is above, it's going to set it as a stop order instead of a limit order. So I think that's probably what happened. And then when it executed, it might have executed you a little lower down here or up here, depending on where the market order was at the time. And that's typically what happens when you have a stop order versus a limit order. So the only way you can put a limit order is if you put your price, and that's why we have a limit order over here, because you would have to put it at a price that's above where price is currently at. Because if price is above here and you set your order at 370, then it would have filled it at a stop order, not a limit. I know it's kind of confusing, but that's just that's how it works. That's why like I always tell people like set your limit at the next highest level. But this candle here was tricky because you guys saw it during the live session. Even I was confused because I swore it was at like 370, and then when the candle closed, it was above it. So it's just the market's been kind of tricky. It got a little blocky towards the end over here. And unfortunately, that's just what happens sometimes. You don't have control of the market conditions. Market could be moving smooth, and the next moment later, it can be moving blocky, which is kind of what happened here. But I only know I hit it because all my positions here close. So yeah, I mean it's all good. If you guys ate a loss on that trade, I mean it is what it is. You can't really do anything about it. But yeah, I mean that's why I stopped trading. So after this trade right here, I pretty much just cut off my trading because I already knew the market was moving kind of funky. And you guys saw how these candles were moving. They were kind of like all over the place. Like it was like low volatility, and then all of a sudden it picked up. And you can see all this crazy movement here with all these candles. And there's a couple other entries that actually came up. Like there was another entry right here that came up for a what was I call that? For the breakout V3 continuation. I forgot what happened with this here. I know there was something that was down here, but there was a reason why I mentioned I wasn't going to take it. But yeah, there's entries that came up right there. And I think there was another CB entry that came up somewhere over here. There was a lot of entries that just started showing up towards the end over here. Oh, it was because the cutoff was at 740. So as you guys know, I typically stop trading at 740 because that's when the volatility dies down. And you can see over here, this is why price started moving sideways. And that was the reason why I didn't take this as a breakout V3 because I didn't want to get caught, or a breakout V3 continuation because I didn't want to get caught in the sideways movement. I've lost a lot of trades trading after 740. And I just learned from it, right? Learn from the mistakes. That's why I stopped trading after 740. So let me see if there's any other questions here. Yeah, Nikhil, he got in a little higher too. So he said he got in at 73. So he was able to catch that. Nikhil's asking if I can go through the MPS requirement. Sure, we'll do that. And here is Maria's. So these are your profits from today, right, Maria? Nice. Yeah, so it looks like you did I mean, it looks like you locked in profit. Did you pull out of the trade early or did you let the trade go through completely. Let's see. So Maria said, I would like the results to show commissions and weekly P&L. So I see that you have a weekly P&L here, but for some reason it doesn't show anything there. So your weekly P&L is going to reflect your commissions. That's why mine over here is slightly different. So for my weekly P&L, it does reflect the commission. So yours should, I don't know why it doesn't show that on yours, but okay. Yeah. So if you're on Arithmetic, I'm not sure if you're on Arithmetic, Maria, but if you're on Arithmetic, Nikki says that it doesn't show it. So that might be the case. Okay, gotcha. So it looks like you can't show it on Arithmetic, unfortunately. I'm on NinjaTrader, so it shows up on mine. But yeah, unfortunately, it doesn't show up on Rhythmic. It would be nice, but I mean, I don't know. I don't know why it does that. It should be the same. But yeah, unfortunately, you can't show the weekly with the commissions. Gotcha. Okay. So for Akil, I'm going to answer this question here. He wants to go over the momentum pullback scalp requirements. So let's go to see if there's another entry here that came up. I guess we could use this earlier one because this one did come up earlier and we didn't end up taking it. I think it was because it was close to the sessions or something like that. But here's the setup here. Okay, so let me pull up the criteria for the MPS. Man, I wish there was a way we could fix this because the text box was so much better before. Now it's kind of hard that I get stuck. Okay, so momentum pullback scalp. So I know it looks like there's a ton of requirements here, but it's really not that much. Once you kind of bunch them all together, it starts to make a lot more sense. So for step one, you want to identify the direction of momentum using the momentum indicator. So if you look up here, we have a bearish momentum, right? We have a sell momentum signal. So in this situation, you're only looking for sells. That's going to be step one. For step two, you want to confirm the trend is matching the direction using the pivots indicator. So with that said, you have right here the downwards trend. You can see prices below the pivots. The pivots are angling down. They're spread out. And you can pretty much clearly tell that price is trending to the downside, right? So step one, confirm momentum. We have a bearish momentum here. For step two, you want to confirm that the trend is matching the pivots trend. Or you want to confirm that the momentum is matching the trend using the pivots. And you can see that they're both bearish. So bearish momentum, bearish trend, that's steps one and two. Those pretty much go hand in hand. So you don't really have to like think about it too much. You kind of just look, oh, if this is bearish, then you want to make sure the trend is bearish. Or if the trend is bullish, you want to make sure that the momentum is bullish. Pretty much, it goes two and two together. For step three, you want to confirm that the trend is matching using the trend meter. You can see down here that the trend meter is also red. So you have everything lined up here. Bearish trend, bearish momentum. Step four, you want to confirm a directional push in that direction. So this is kind of where it gets a little confusing because these aren't really steps that are kind of like, there's no step-by-step here. You just want to make sure that they all line up at the same time. So this directional push happened right here and it continued after the trend. So the trend confirmed right here at this point when it shifted. No, I'll put a line right there. And you just want to make sure that there's a directional push. So we have bearish trend from the trend meter, bearish momentum. You can see that price pushed down from this point right here. Moving on to the next step, you want to confirm a pullback in the opposite direction. I know this might sound a little confusing as well, but the pullback is really just an opposite candle. So you have a directional push right here. You have a candle over here, which is pushing the opposite direction. So this would be the pullback candle. And once you confirm that, you want to make sure that and again, for step six, this is like something that's pretty much self-explanatory, but I just put the requirement there so that you don't kind of, you don't forget about it. But the momentum is way up here and this retraces right here. So it's super far away. And you can tell that this retracement doesn't push back to the momentum, which is way up here. So once you've confirmed all of that, you confirm the bearish trend for the pivots, bearish trend from the trend meter, bearish momentum, directional push to the downside, retracement right here. Next, you want to confirm that you want to enter at the nearest whole number. So I'll turn on the levels indicator right here. You don't really need the levels indicator, but I just did this to make things a lot simpler so you can see where the lines are at. So like I said right here, this is 400, and then you're looking for the nearest whole number. So price has retraced up, and your entry is going to be at the nearest whole number, which is the next one, which is right here at 410, right? Price goes down, pushes up, the nearest whole number is right here at 410. Once you have that set up right there, you're going to have your pending order. So pending short position right here. You're going to have it set to a 1025. And once you have it lined up like that, that's pretty much it. Once you have it lined up, you're going to wait for price to push up, fill your order, and then come back down and hit your TP. The price goes up, comes down, and that's the pattern that you're looking for. And you can see right there, price comes up, fills the order, and it comes right back down to full TP. And that's pretty much it. Let's see, Akil is asking, is there a reason why the entry has to be on a whole number? Yeah, so it's set at a whole number because that's basically how price action usually works. I mean, if you look at these candles here, they typically push to whole numbers. Whole numbers are typically where the algos trade at, and that's where you want to trade at. Because you want price to reach the algo, which is at the whole number, and you want it to bounce off that whole number, right? And that's kind of how the strategy works. You're looking for a directional push, retracement, price will retrace up to the whole number, the nearest whole number, and the algos will bounce directly off it. As you guys know, like majority of the market movements in the market are controlled by bank algorithms, right? Bank algos, institution algos, like basically 75% of the market, if not more, is run by algos. A lot of people don't trade discretionary anymore, not for these types of quick moves. So what we're doing is we're trying to identify where these algos are trading. The algos trade at whole numbers. So let me see, like if you just pull up the levels indicator, and let's go to a clean chart. So let me go to a clean chart where you can kind of see, and I'll show you what I mean and why is it so important that I choose to trade at these whole numbers, because you'll see that's where the bounces happen. So let's go over here to, let's just rewind to like the morning session. Right, let's go to like 6:30. So typically they trade at the bigger whole numbers. They don't trade typically at the tens. They typically trade at like the 50 and the 100. But you can see over here, this is typically where price will push up to, right? So we're just going to use this for an example to show you where these price pushed to. So again, right here, see how price kind of pushes up a little bit? You're going to expect some sort of bounce to happen at one of these levels, right? One of the whole numbers. See how price pushes up and then it rejects directly off that whole number right there. That's why we choose these whole numbers, because that's typically where they bounce from. And if you just keep looking around, you'll see where these lines are at and see how price just bounces directly off these whole numbers, retracement, and then there's a whole number right there. Price comes back down. And that's just kind of where like the bank algos trade at. And you can see again right there. Sometimes they're like really close to them, sometimes they're not. But yeah, the whole numbers are typically where like a lot of these bank algos want to trade, and you're just kind of you're trying to get in between. So what you're trying to do is you're just trying to catch like that little gap, the little movement here, and you'll see that these prices move really quickly between, you know, these little whole numbers. So that's kind of what you're aiming for. You're just looking to get in and out super quickly, get your 10 points, and be out of the market. But yeah, that's pretty much the main reason why I chose the whole numbers. But realistically, like, so let me just use the 50 mark. So this is the 50 now, 50 in the hundreds. You'll see as price moves around, see where it bounces from. Price bounces from the 50 and the 100 marks. So it's just from like if you, I've read a lot of books, and like if you look at where the algos and a lot of these banks like to trade, they like to trade at the whole numbers, which are the bigger numbers. But if you want to trade at like the smaller ones, like we do at the tens, they work very well as well. So see how price respects these whole numbers. That's why. But so for me, I'm trying to get in between. I just want to get like those small little moves. So yeah, if you want to, and you can see here, the price always respects these whole numbers because that's where the bank algos are trading. So like basically price will come down a little bit, comes up, the bank it'll just reflect off it. Reflection, 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 comes back down, reflect, reflect, reflect. And then you can basically trade like if you really wanted to scalp like every little bounce, you technically could. If you find the range, like once you find the range like this, you can just take every like 10-point trade or not even 10 point. I've seen some people who trade off like they only go for 7 points. So we go for 10 points. And I've seen some of these scalpers who trade Apex and they only go for 7 points. They try to go in and out super quickly. Yeah, see that? This is super obvious right here, right? Akil? Super, super obvious. It's where the bank algos are trading. And again, right there, same thing. So that's what we're doing. We're just looking for the bounces right there. We're also using the trend. So again, right here, see? It's crazy, right? Like if I was to create a strat, I could literally create like a strategy where you just take, trades off these bounces here. Because if you have enough if your stop loss is like wide enough, you can technically, like you can survive a retracement and then it'll go back to your TP. Like right here. Like imagine if you're going for 10 points every time. See, this is 10 points right here. It's so small. You could literally catch every 10-point bounce. Every time price touched right here, you could have literally got in and out for 10 points every time. It doesn't even matter which direction you traded in. You could have like no stop loss. I would never recommend you do that, but you can literally like whenever price goes right there, you have a pending order and just like trigger, boom, 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 boom. You would have had like 10 entries right there. This is how scammers scam people. Like if you've seen like you see people who have like a shit like a bunch of trades, right? I'm sure you guys have seen it. People will have like a whole list of like where they have like 10 or 20 trades and they all hit. This is what they do. They just enter right here at the whole numbers, bounce, 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 but they have no stop loss. So yeah, it's all fun and games until the trade doesn't go your direction, then you're pretty much screwed, right? But yeah, there was another little nugget for you guys if you guys want to trade that way. I mean, there's ways to trade like that. Not that I'd recommend, but there are ways to trade like that. And now I'm kind of curious. Now I'm like, man, maybe I should make a YOLO account and just like trade at all these low price points. But the thing is, you have to find the range. Like you can't trade when price is moving directional. Like this right here, you get destroyed, like super destroyed. Like for example, right here, see if you got in right here, this is where things would turn very, very dark for someone because you can try to catch the bounces, but when it doesn't actually bounce like this right here, then you're super screwed because price just keeps dropping. So you have to have a stop loss there to kind of like catch you at the next level, basically. And otherwise, just keep stacking up the wins. Yeah, so you can literally take like there's so many trades that could have been taken right here. You just take a sell, 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 sell. Like literally every candle here, you could have taken a sell and made massive profit. Or go for even something smaller, like I said, 7 points. I've seen people do 7 points. They just took like seven. If you took 7 points here, like it's pretty crazy how much profit you could have locked in. 1, 2, 3, 4. Wait, 1, 2, 3, 4, 5, 6, 7. That's like 7 wins right there. 8, 9, about like 9 wins right there. So this is where you use the trend into your benefit, right? Because you want to trade in the direction of the trend. Sometimes it's not even necessary because you can just take every balance. Like you can probably just do this with a 50-point stop loss. And again, I'm just giving you guys ideas here. I'm not saying you guys should do this, but if you have a 50-point stop loss, you pretty much just keep shooting for it until you get to like until you lose, right? And then if you lose, then okay, fine. You still came out with a profit because there's like 9 wins here. So if you have 9 wins and you have one loss, you're still up 40 points. So it just becomes a numbers game. It's a game of probabilities. So, I mean, I've been trading for so long. I've actually tried a strategy like this before. It does work. Like, trust me, it works. But you have to understand when to not trade it. Like, for example, right here. you probably would have hit it like like a couple times, 1, 2, 3, 4, maybe 5 times. And then if you held on to it, you would have lost that trade and then you would have just kept going. But you just have to understand the market conditions. Works best when it's moving sideways. It's back to normal. Let's see. Yeah, Kill City. I wonder if we were able to use some of the K2 indicators along with them to make a new strat. Price has been a range often. Can you include the K2 indicator in there? Yeah, no, for sure. You could. So let's go back to that again. I'll just show you one more time. And we got a lot of free time anyways. We don't really have many questions. So that's the way that I used to trade it actually. So for example, here, let me turn off the high-low. So the way that I would do it, is I would take trades in the direction. So if I had say for example momentum and it broke past a structure. So let me see if there's, and I would use a trend too typically. So you can see over here how the trend is bearish, right? And I'm gonna show you an example of what I'm talking about. So the trend here is bearish, right? See how we have a sell momentum right here? This is how I personally, because I've done this strategy before. The strategy does work. You just have to use it during certain market conditions. So, and it also worked right here. I'm going to show you, there's actually 2 examples. So let me go over here first. So you can see how the trend is bearish, right? We have a bearish momentum. See how price pulls up above this point? If price was to break and close below like that, what I would do is I would enter a sell position. And I would write it to the next full number. See, like this right here, Akil. So see, sell momentum, retracement, it breaks past this whole number right here, the 50, and I would just write it down to the whole number. So see how price kind of goes sideways for a little bit, full TP right there for 40 points. And I've used this strategy before. This isn't something new. That's why I'm able to show it to you because I've done it before. Full TP right there. These are just strategies that I don't like to teach the group because I know people are going to do it incorrectly and they're going to get mad. Like I can do it because I understand what I'm looking for here. But a lot of people get greedy and they don't want to they don't want to follow the directions. The directions are super simple too. So that's why I was saying that in the future, I might create like a master class to teach you guys. I have a lot of strategies that I can teach people, but I don't want to teach them to everybody, just to like people who actually follow directions. So again, right here, see how price, we have a sell momentum, see how it retraces up. Now I'm looking for the same thing. Looking for this here, see how it breaks and closes below. Same thing. You go down there for 47 points. I typically go for like a 1-to-1. That's usually what I do. And then price ends up going back down. And again, right there. So you have like 2 back-to-back wins right there. And they're pretty big moves. They're not small moves by any means. They're pretty good moves. And I typically only do like 1 per momentum. So again, right here, I'd be looking for the momentum to come back down. It doesn't actually come back down there. So this one actually does. This is kind of late in the session though. So the time right now is currently at 11:30. So I think I'd probably stop trading at this time. Well, I wouldn't even be trading at this time. It's already late. But if I was to trade this late into the session, I probably would stop. And you can see right there, it starts to reverse. Because this is where the mid-market reversal happens, like mid-market. But that's just like a little I guess intro to, because I have a lot of strategies that I can teach you guys. I know like so many different things I've tested, but I only handpick certain strategies to actually teach the community because not everybody can like pick up and learn this type of stuff. But if you go back pretty far, like if you wanted to go back and test it, you can always go back and change the settings. Like if you wanted to just go for like the 100 points instead of 50, you can do the same thing too. You just change the settings from 50 to 100. And then same thing. See, it's bearish right here. Pretty much just write this down. Same with this right here, sell momentum. There's a ton of ways to trade these strategies. Yeah, you just got to play around with the indicators. Like like a lot of people don't realize how strong these indicators are. I created these indicators for a specific reason, as tools, right? They're not meant for specific strategies, but you can use them together, like put them together and create a ton of different strategies. I probably have like, 20 to like 100 other strategies that like small strategies that I put together in the past that they all kind of work. Like you tie everything together. You tie the trend, you tie momentum, you tie price structure, whole numbers, etc. And you can put together like some pretty impressive strategies. Like I've seen people in the group who apply similar strategies, um, but they don't tell anybody. So you'll see certain people in the group that like they use the indicators to create their own strategies, and you'll see them post a lot of big profits. But you're kind of wondering, okay, what strategies are these guys applying? And you'll see some people in the group ask, hey, what strategy do you apply? And they're never going to give them like like a real answer because they don't want to share it. But yeah, this just goes to show that like if you guys actually put in the work and play with the indicators, there's a lot of stuff that you can do with the indicators. You don't have to use my strategies. Like you can literally create your own strategy, just playing around with my indicators and then figuring out what types of patterns you can find because there's so many patterns in this market. And that goes, now we're going back to what I was going to show you guys originally. So this is the next strategy that I kind of plan on. What did I do here? Oops. Man, I hate this text box. There we go. I thought I messed up my thing, but I didn't. Okay, so let me just show you the strategy again. Or not the strategy again. Let me show you the divergence strategy. And this is like kind of similar to what I was showing you guys earlier. It's just very simple. So everything that I try to show you guys, I try to make it as simple as possible because I know for a lot of people, it doesn't matter how simple I try to make it. Some people are still going to be confused about it. So let me show you guys over here if I can find an example. Okay, so here's an example right here. I know this is late in the session, but let me show you guys an example of this strategy here that I sort of plan on introducing to you guys. And I know this works because I've done this before. This is probably one of my very first strategies that I used to apply a long time ago. It still works very good too. That's why I'm kind of bringing it back. So first and foremost, we have a sell momentum here, right? We have a sell momentum, and you can see that divergence down here is showing that bullish is still in control. So you're looking for it to confirm, and you can see over here where it's confirmed, right? We have a sell momentum. We have a bearish divergence here. Typically, you could take this right here right away, but I'm not going to take it. I'm going to wait for it to retrace again because I want to wait for that confirmation. I don't want to get in right away. And you can see if you wanted to get in right away, it still would hit CP. So again, there's like different ways to apply the strategy. But for me personally, I would have just waited for the next divergence. So, okay. So here goes the divergence back. So we're getting the retracement right here. Let me zoom in a little bit. We have sell momentum. We had the bearish divergence. We have now a retracement. So the reason why it's a retracement is because you see the bullish divergence start to swing up, right? Prices are retracing up. Now you're just looking for it to confirm. We already have momentum. We have trend. So now we're just looking for this to swing back down, right? And it looks like it happens. Actually, it might not happen here because it's late. Oh, it actually did happen right there. Okay. Because it was kind of late in the session. I was looking at the timestamp right here, but I guess the entry still came up. So, okay, right here, let's see the divergence. This is the divergence that I was talking about. So we have momentum here. We had a bearish divergence. We have a retracement. Now we have a confirmation of continuation. So the momentum is continuing. As you can see here, price comes down. We already know its price is supposed to come down, but this divergence here is showing you that, okay, price is probably going to continue at this point. So with price continuing right here, this is where I would enter and the volatility here is low, so this probably won't work out. But basically, this is a setup that I'd be looking for. And you can see eventually it hits, but it takes a long time. But you guys see how simple that is? We have momentum here. We look for the retracement and we look for the confirmation. So we don't get in right away. You could get in right away if you want. But for me personally, I like to know for sure. Like I want to know for sure this strategy is going to hit. I'm not looking for a maybe entry. I want an entry that for sure is going to hit so I can keep stacking up my wins. So there goes an example of it right there. Super, super simple. And this is why I'm saying, like, this is one that I can teach the group because it's not really difficult and it's kind of hard for someone to screw up. Unless, well, I mean, then again, there's some people that screw up things that shouldn't be screwed up to begin with. So we'll try to keep it at that. But let me see if there's another example here. I don't see any examples right here. Let me see. Okay, there's another one right here. So let me show you another one right here. Same thing. So we have a bearish momentum, right? Let me just go back to the momentum signal. So we got a bearish momentum. You can see that the divergence here is already bearish. So now you're going to wait for the retracement. Okay, perfect. We got the retracement here. We still have the sell momentum. See how it's diverging to the upside? That's perfect. We want that. We want the retracement. Now you want the confirmation. So we're basically waiting for the confirmation. Right here, the confirmation's met. You can see we have bearish momentum, retracement, confirmation of continuation right there. Sell momentum right there, or sell entry right there. That's your entry. You let the trade run, full TP. See that? Super simple. So there's just a little intro of like what I'll have to put something together to, well, I mean, for you guys can see it's super simple, but it's not going to be super simple for everyone. So I got to put some criteria together. I mean, I could just put it together right here. I need to finish working on this indicator because I know it's kind of, there's different ways to look at it too. So there's, we actually set it up where it's like that. It's kind of hard to see, but I don't know. Some people like it that way. This might be a little easier to see that divergence. I'm just going to figure out what's better. Lines are having this area right here. You can see how it kind of retraces and then it comes back down and it makes it super simple. But again, I'll just have to play around with it. I personally like the lines. I think the lines work better for me specifically. But I mean, not everybody's the same. Yeah, I think the lines do work better. Let's see if there's another example here I can maybe run by you guys before I wrap this up for the day. So if there's any other questions, guys, feel free to put them in the chat. This session's for you guys, so whatever you guys want me to help with, I'm here to help you guys out. I don't think there was anything else from today. So the cool thing with this strategy is that you can technically trade it in both directions. I probably wouldn't, but there's going to be some days where the market's kind of just going sideways, and you can pretty much trade it in both directions. You can trade it up, you can trade it down. A lot of times you don't even need the trend, but I think to be on the safer side, we should use the trend just to make sure we don't get too ahead of ourselves. But in the summer, we'll probably be able to trade both ways. I just don't want you guys to get into that wrong mindset. I know a lot of you guys, sometimes people just get into that mindset where they want to take every single trade that comes up, and not every single trade is going to be quality. So yeah, other than that, let's see. Akil is asking if we can test it out on last week's market. Of course. So let's go over here let's just go to our random day. Let's go to, I don't know, I guess we'll start with Thursday. Just so I can show you guys like at random. I don't like looking at stuff and then like making it seem like I planned it out, right? Let's just go to let's go to Tuesday right here. Because I want to show you guys, like, this is like usually where you have the best idea of how things work because you're not able to really test it. You're kind of just looking through and you're looking for entries at random. Okay, so we have one that is, this is bearish. All right, let's use the trend for now because the trend is obviously going to be more beneficial versus going against the trend because the market was still kind of trending around this time. So we had a bearish trend right here. We had a sell momentum. I'll just replay to this candle right here. So right here, you can see we have a sell momentum signal. We have a bearish divergence right here. You look for price to retrace up. It retraces up right there. Now you're looking for the continuation back down. Continuation back down happened right here. So this right here would be an entry. However, it's touching the session. So for me personally, I would avoid this trade, but we'll just run this example to see how it looks. So we'll do 1025, let the trade run, full TP. So I mean, it depends on the person. If you care about the sessions, then you'd avoid it like me. But if you don't care about it, then you would just take the trade. So you can see this is from Tuesday at 7:30. This would be during live session time. And the cool thing about this is that you can keep using the momentum. So you don't have to wait for the next momentum. You can just wait for it to retrace up again. So right here, it's retracing. See if it crosses again. Didn't really cross. Okay, so it crossed right here on this green candle. So we had, again, retracement divergence. And then again, right here, it's red over green. So it's back into confirmation to the downside. Now you'd enter right here, same thing. 1025. This is at 750. I personally would be done trading at this time because, I stopped trading at 740. But let's just run it through, see if it works. And looks like it hit right there on that first initial candle. It was a tight one, but it still hit. I personally wouldn't have taken the trade because it's after 740, but you can see here that it doesn't work very well. And if you want to trade outside the session, I mean, again, it's up to your preference if you want to keep going, because you can keep going if you like. It's just up to the person, the person that's trading. So again, right here, same thing. The trend here is kind of messy. So, I mean, depending on how you were identifying the trend, because you can see it was bearish here, and then it started crossing over a bit here. So, I mean, depending on the person, again, I personally wouldn't be trading after 8, but we have a sell momentum here. We have the bearish divergence, bullish divergence, and then it swings back over here. And if you were like, oh, this is still bearish, I mean, it's really up to the person who's applying it, because everyone looks at it differently. If you wanted to set that up right there, you can see right there that it ends up hitting right after too. So, I mean, it's just up to the person. Let's see, Rashida's asking, would a TP stop loss be 1030 or a 1-to-1? So you have the choice. Like I was saying earlier with the kill, I'll give you guys the framework. The problem with using a 1-to-1 is that you would need to have a specific contract size set to the specific ATR, right? Because personally, I would do 1-to-1. I think 1-to-1 is perfect, especially for a strategy like this if you're trading in both directions. But the problem is, if you're changing contract sizes based off the TP stop loss, then it's going to be kind of tough unless you're you already know what contract sizes to use. For me personally, I'm going to be using a 1025 or a 1030 like we normally do for the scalps. And that's only because I use a fixed contract size. So yeah, exactly. So if you wanted to do it, you can base it off the ATR. You could actually make it a little bit higher. So for example, right here, I think the ATR was, and this is after 8 o'clock when the session was kind of low, I would probably just round it up. So see right here, the ATR is at 17. I would round it up to 2020, just so that you have some space. So put it to 2020, or you might not want to do 2020. You might want to round it down because this is after 8 o'clock. If it's during live session time, say before 8 o'clock or before 7:40, then I would round it up. So we'll just go back to this one over here. The entry that actually happened during live session time. So for this one over here, the ATR is at 18. So right here, you can round it up if you wanted to 2020, because the volatility is high. So it's okay to round it up because it's probably going to push past that point. And you can see right there, it blasts right through it. If you're trading when the volatility is low, say after 8 o'clock, between 8 and 10, I would probably round it down because you want to get in and out of those positions very quickly. I would compare 8 o'clock to 10 o'clock to Asia session, right? Because if you guys have ever traded Asia session, you'll see that the market goes sideways for a bit and then randomly it spikes, right? You'll be trading and you'll be holding on to that position for 2 hours, and then it hits 8 o'clock, 10 p.m. Pacific, and then it just starts to spike in one direction or the other. That's kind of what happens during the mid session, because that's when people go to lunch. So it's kind of just based off the conditions at the time. So Yeah, I would base it off ATR, or the way that I would do it, well, for me personally, is I typically do 1 times 1.5. So for example, right here, the ATR was, and this just becomes more work. So I don't know if this is something you'd have time to do, because when I trade on Forex, so if I swing trade, I typically do ATR times 1.5. So right here, the ATR is 18. So 18 times 1.5, it gives me a 27 ATR. That's typically what I would do. It's from testing too. So I've tested it around a bit. 1.5 ATR typically works pretty well. Let's see that one trade that came up after 8. Right. I mean, it wouldn't matter. This trade would have lost either way because it's after 8 o'clock. It doesn't ever really come down. It's the same thing. ATR was at 17. So 17 times 1.5. I still wouldn't mess with it. It's 25. Here's a bullish momentum. So this is where the volatility starts to pick up a little more. So we have a bullish momentum. You can see we have bullish divergence, retraces. There's another divergence here for bullish push to the upside. Like I said, if you want to round it down, you can do what's at 17. So you can do 15, 15 if you really wanted to round it down. And you can see here that it ends up hitting, but it does go back and forth. This is the type of market I don't want to trade in. And this is why I never recommend you guys trade between 8 and 10 o'clock Pacific time. If you want to trade, wait until after 10, because you'll see here the volatility starts to pick up as it gets closer to 10 o'clock. You go sideways for a bit, and then as you get closer to 10 o'clock, you can see the market starts to move again. You can see that there's some bigger movement here because people are back in the market. But all right, so that's it for that question there. If there's any more questions regarding, this divergence strategy, feel free to let me know. Otherwise, I'll try to come on these mentoring sessions a little bit more often so that we can kind of, I like doing mentoring sessions when we have new stuff to cover. So for example, right now we have a lot of these divergence type examples that are going to be coming up. So I think I'll be hosting more mentoring sessions moving forward just for a little bit so that we could kind of talk about this more. Find out some more inconsistencies in the market, some things that we can change. And I got to keep working on this indicator right here. I've got a lot of stuff on my plate right now. I'm still studying for that Series 3 test, so I'm studying for that, trying to put the strategies together, trying to find the most ways for us to make money in this market, and balancing all of that, of course. But I'm always going to find ways to do that and be beneficial for all of us. Because our main goal here is to make money. That's our goal here. So I'm never going to stop. I'm going to keep looking for little different inconsistencies in the market, some imbalances that we can kind of take advantage of, especially with this type of market condition right now. Let's see. We have one more question here from Chase. Chase is asking, hey, Sean, can you go over the 30% rule and recommendations on how the trailing drawdown works on a funded account? Just got funded today. So nice. Congrats to Chase. You're getting a funded account with Apex. So the 30% rule just means that you can't make, I think, 30% more than what you typically make. So like, for example, here, I'm going for about 10 points, right? So every day, I'm typically going for like 10 points. So if I'm going for 10 points, I'm going to have an average of so average point gain is 10, 20 points daily, right? So 10, 20 points daily. So 10 times 5, or I'm doing 20 contracts right now. So 20 times 5 times 10, 20 times 5 times 20. So I'm typically making, right, it's just going to be per trade for the most part. So it doesn't matter what it is for the day. It just matters what I'm making per trade. So average profit, 1,000 per winning trade, right? So you just can't make more than 30% of that. And the reason they do this is because they don't want people to be gambling, right? They don't want people to just get lucky and make like a huge day. Like I can't have one day where I'm making 1,000 per trade and then have another day where I'm making 10,000 in one trade. That's past the 30% rule, right? Because I'm going so much higher. They don't want people to just trade news, get lucky, and then hopefully, and then basically gamble their way to a payout. So that's kind of how the 30% rule works. You just have to have your profits have to be around the same. You can't have like a huge gain off like one trade that you got lucky off. They want to make sure that you're like actually legit. You're not just getting lucky on a trade and then hoping to get paid out. Because that's typically how a lot of people trade, right? They just take some YOLO trades, hope that they hit that big payout or they get a big win, and then they expect to get paid out. So that's kind of how the 30% rule works. I mean, it's pretty straightforward. It's nothing really complicated. It just means you can't have like one day where you're making 10 points and then one random day you're making like 1,000 points, right? It's a huge difference between the accounts. But if you're trading normally, you're not just taking dumb trades or random trades, you should be fine. Because most of the time, if you have a trading plan in place, you're not going to be shooting for anything crazier than what you're already making. You might make a little more per trade. Like, something like, for example, today, I usually make about 1,000 per trade. Today I made 1,200, slightly above. It's not 30%. I probably could have made 2,000 today. Wouldn't be more than 30%. It'd be slightly above. And with your trailing drawdown, so the way that the trailing drawdown works once you're funded is, I mean, I don't know what account size you have, but if you go to the FAQs, so you'll see over here on the FAQs that your trailing drawdown will stop. So once you make a certain amount, okay, so you can see over here, once you make a certain amount, so for example, if you're on a 150K account, once you make 155,100, then your trailing drawdown stops. At that point, you're not going to be screwed anymore. Like your trailing drawdown is it's not gonna trail. So it pretty much stops. So once you get to this point right here, your trailing drawdown stops and you can only lose whatever is left in your trailing drawdown. So you can always go past your trailing drawdown, but if you come back down, it's not going to follow. So you no longer have a trailing drawdown at that point. This is where I kind of screwed up because I was up at like 160,000 on my account, and then I just kept increasing my contract size, which I shouldn't have. I should have left it as is and increased it weekly. But this is my first time doing it, so I didn't understand how it worked. And that's kind of how I went on a frenzy. But that's pretty much it. I mean, 30% rule, you just can't make more than 30%, like than you make on average. And then for the trailing drawdown, once you make a certain threshold, so this is the threshold right here. Once you make this threshold, your trailing drawdown stops. And then you could just lose whatever you have left. So like basically when you get to this point, your trailing drawdown will stop at like, I think for the 150K account, it's 5,000. So you start to go below that, then you blow your account. And then same with this right here, because I'm on 300 now. And that is pretty much it. So, all right, guys, if there's any other questions, feel free to put them in the chat. I believe I answered all the questions here today. Let me just scroll up real quick, see if I missed anything. No, looks good. All right. Yeah, no problem, Akil. So, all right, guys, if there's any other questions that you guys have, feel free to reach out. Otherwise, if not, I will see you guys back here tomorrow for the next live session. So, all right, guys, have a great rest of your day, and I'll see you guys then.